I'm Stacy-Marie Ishmael, managing editor of crypto for Bloomberg News. And this is Bloomberg Crypto, a new daily Bloomberg iHeart podcast. It's Tuesday, June 7th. Fidelity is one of the largest investment managers in the world. The firm made headlines when it announced its intention to offer clients the ability to invest in crypto through their 401k retirement accounts. In such a volatile environment, is it a risky bet to add digital assets to your retirement plan? Today, Bloomberg reporter Suzanne Woolley joins me to talk about the recent history of 401ks and crypto and why the U.S. Labor Department is less than enthusiastic about Fidelity's move. Suzanne, so good to have you here. It's not often that I get to talk to someone who covers a sort of a more predictable end of the market versus the complete chaos of crypto at all times. And really, that's what I want to ask you today. Fidelity, one of the largest investment managers in the world, not an organization that you naturally think of when it comes to running towards risk, recently announced that they were going to allow people to have exposure to crypto in their 401ks. Why?
It is very weird, big picture to have like one of the largest 401k plan administrator offering a product that lets you have crypto in your 401k, which is a workplace savings plan that you are supposed to have, prudent investments in that have to be monitored and they have to be in the best interest of participants. They tend to be well-vetted stock and bond funds and mutual and money market funds, things like that. So to have crypto come into the mix
doesn't seem what you would expect.
It's pretty wild, actually. To have Fidelity jump in, it seems kind of crazy on the face of it. But when you look a little deeper into Fidelity, they've been one of the financial services companies in this space that has actually moved into crypto faster than others.
They have the digital assets arm.
They do, and they've been sort of exploring the crypto space since 2018.
Which is early adopter by institutional standards.
I know.
So, respect.
Right.
So if I am a person with a 401k, thank you, Bloomberg, and I say, okay, under what circumstances would it make sense for me to opt into something like this?
It very much depends on how comfortable you are about crypto, which I would imagine is high. You're
Me
very comfortable. You
not
specifically. Depends how comfortable one is with crypto and your knowledge of crypto, your ability to take risk. Mm-hmm. I would argue your age, because crypto can be so volatile that if you're approaching retirement, putting a chunk of your money in crypto would be taking a big gamble. A lot of financial advisors suggest maybe if you're going to do it, maybe 1 to 5%. If you talk to advisors who are sort of much more into the crypto space, they might say 10%.
Right. Again, that risk tolerance. What are some of the other risky or, let's say, volatile assets that have historically been included in these sorts of retirement savings accounts?
You could argue that a lot of the equity funds in retirement accounts now are pretty risky because we've seen even the S&P funds where people think that they're diversified among 500 stocks. A good chunk of that index is in the mega cap tech stocks like Amazon and Facebook, which have been hammered. So that is supposedly a safe and diversified investment. Right now, it doesn't feel that way. Mm-hmm. But generally, in a 401k plan, you have pretty plain vanilla. You've got your stock, all different flavors of, stock funds. You've got different kinds of bond funds. You've got money funds. You've got maybe an emerging markets fund, some international fund.
Just for a sprinkling of flavor.
Yeah, a little sprinkling of flavor. But really, nothing like crypto. There's been some talk of maybe getting private equity.
Right.
Private equity firms have wanted to get their toehold in 401k land, and that's something to keep an eye on.
So Fidelity is, I would say, a first mover in the big institutional space, but there have certainly been much smaller providers who have been trying to offer similar things. What about Fidelity's offering seems to you to kind of thread that needle of providing some exposure to risk and potential return, but also a degree of stability?
Well, the way Fidelity has created the product, the individual company, the plan sponsor of the 401k, can decide they can allow people to put up to 20% of their balance in crypto. It's unlikely that many funds will do that. What some of the smaller providers have done, there's a company, a much smaller 401k administrator called forusall.com. They will allow people to put up to 5%. You can transfer 5% of your balance in, and then 5% of your contributions from then on can go into crypto. There's a lot of education around this, obviously, because plan sponsors have a fiduciary duty to be
Make sure
prudent.
I'm not making stupid decisions.
Exactly. So there's a lot of, for us all, for example, I think you have to go through an interactive quiz before you're, air quotes, allowed to invest in crypto.
So it's like informed consent, essentially.
Exactly.
Got it. One of my other questions about this is I noticed that the Department of Labor was not super keen about this headline from Fidelity. Why?
The Department of Labor, they are the ones that enforce this law called ERISA, the Employee Retirement Security Income Act. And ERISA is the law that says you have to have prudent, non-speculative assets. And they are, what they are saying is they think crypto is speculative and volatile. There's no broadly accepted methodology for how to value it. Unlike stocks and bonds, which have methodologies and academics have been studying them for decades and decades.
Crypto's only been around for 13 years.
Exactly. So they are sort of saying, give me your argument for why this is prudent. And they've been very surprisingly sort of aggressive in coming out against it.
But in regulator speak.
Well, in regulator speak, okay, yes, okay. So they said they have grave concern.
Right, which is the equivalent of aggressive.
Yes.
In a regulatory context.
Which is sort of yeah.
You're whoa.
Right, regulator head on fire.
Right, got it. Fascinating. So speaking of head on fire, if your, friends and family were to say, hey, I have the ability to put crypto in my 401k, what does that mean in practice? What would that look like for them if they were to go through the tutorial and then say yes?
Well, with Fidelity's product, it'll be listed. If first your company has to decide that they're going to let you get into crypto, and that is a big decision for them.
Got it. So it's actually, you would have to, if you really wanted it, you'd have to lobby whoever at your company is the benefits manager.
And hope that your benefits manager is into crypto or has a son or daughter that's into crypto, So you would go in, and with Fidelity, they create it's called a digital assets account. And they basically create an account for your plan, and you kind of get units in that plan. But it's valued daily. They have some money market funds as part of it so they can settle daily trades. And you would see it if you went into your 401k provider's website offering, you'd see, okay, my stock went up this and my Bitcoin went up that. And, it would be up there along with everything else.
Got it. And just as a final question, Fidelity is obviously one of the biggest and most established players in the space. We talked about For Us All. Do you see other of the major institutional providers kind of following in their footsteps, or do you think they're still in a wait and see?
I think they're still in a wait and see. I think that Fidelity is having conversations with the DOL and
the Department of Labor.
With the Department of Labor. We'll see how that goes. Senator Warren is dead set against this.
She's dead set against most things.
Exactly.
In crypto. Yes.
There's a lot of countries. So I think people are going to wait and see because this is a very conservative industry, and crypto is seen as, the opposite of.
Absolutely. Yes, as folks like to call it, the Wild West of crypto. Well, thank you, Suzanne. That was so helpful. I feel like I have a much better understanding of what this might mean for me. You can find more of Suzanne's reporting on the Bloomberg Terminal, on Bloomberg.com, and on Twitter at @WealthWatch.
All right.
Thank you. On the next episode of Bloomberg Crypto, we tackle celebrities and NFTs. Should you put your trust in movie stars, pop singers, and athletes when it comes to non-fungible tokens? What are some of the legal questions in play with these celebrity endorsements? Tomorrow, a chat with Bloomberg reporter Missy Ighofupulo. I'm Stacy-Marie Ishmael, and this is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Email your comments, questions, or suggestions to crypto@bloomberg.net. Follow us on Twitter @crypto. The producer and editor of this episode is Vicky Vergolina. Our engineer is Desta Wonderad. Original music by Leo Sidran. Bloomberg's head of podcasts is Francesca Levy.